Hi, this is Greg Kilpack of MarketTimingUniversity.com, and today I'd like to talk to you and teach you what is a mutual fund. A mutual fund is basically a way to diversify your portfolio and let someone else choose the stocks and the bonds for you, basically. And in the process of teaching you about these things, I'm here on Fidelity's website. Fidelity is one of the largest mutual fund companies in the United States and probably the whole world. In fact, if we go to this list, it says that Fidelity is number one in assets. You can see it here in $984 billion in assets and 315 distinct funds. There are many other big ones here, including Vanguard, Franklin Templeton, American Funds, T. Rowe Price, and so forth. You can see the whole list right here. But basically, since I used to work at Fidelity and I know their website, I can teach you better from there. So why don't we go right here and I'll show you a few things where you can research. Okay. Basically, a mutual fund is any fund where they choose stocks, bonds, or a mix of those two, depending on how aggressive they want to be and how aggressive you want to be. So you choose a fund, and that'll let you know how good of a return they've given you in the past, as well as what you can expect in terms of return and volatility in the future. Okay, so let's take a look at this. Let's review some mutual funds. Right here, under the Research tab, well, first off, we've got a lot of tabs here. You can sign up for a new account online and fill out all their forms. You can go to the Insights tab to get news and insights. You can go to Research. There's retirement planning and other good tools here, calculators, information about different types of investment products. There's no way I'm going to cover this whole thing. Right now, I just want to talk about mutual funds. So let's go right here. Now, if you have an account at Fidelity, you can have either a retirement account, like an IRA, or you can have just a regular brokerage account that will allow you to buy stocks and bonds. But we're talking about researching mutual funds. So let's click right here under the Research tab. Okay. Now, under the Research tab, you can start to research what kind of mutual fund you want to look at. And in general, I'm going to be looking at U.S. equity all the way down here. So let's click on that. And then it goes down to what kind of fund do you want. You can choose from all of them, where it's right now, or you can choose from a blend of growth and value, focus on growth, focus on value, mid-cap, which is going to be more volatile but generally have better returns in the long run than large cap, and small cap, growth and value, should both have better returns in the long run than mid-cap to large cap, but it's going to be more volatile, so it could have bigger losses when the recessions come. So the key to remember, if you're going to invest in a small cap or a mid cap or even a large cap fund, is to not sell during a recession, because that's when you're doing the opposite of what you're supposed to do. You're going to buy high and sell low. Instead, you should hold on if you're going to be a long-term investor and wait for the market to come back. Okay, so it's kind of like what's happening right now. Investors are thinking about buying. Well, that's great, but if you get suckered into buying now and then selling after a recession when the market's gone down 50%, you're doing the exact opposite of what you should be doing. So anyway, that's just a little bit about strategy, even for mutual funds. But let's focus now. Let's say I want to look at some large cap value funds. So I'm going to click on that. And this is shows you a little bit about the category risk. Okay, you can see that the risk is higher over here on the small cap. So anyway, we're going to go see results. How many funds are available at Fidelity that are large cap value? And you can see some of them here. We've got the Fidelity Large Cap Value Enhanced Index Fund. You've got the Strategic Advisors Value Fund and the Fidelity Stock Selector Large Cap Fund. You've got several other funds that come from different companies down here. So you can buy those as well. But basically, you can compare what their returns have been recently. Year to date, 2013, and here we are, December 7th, 2013. This is the year to date performance. You can see for all of these value funds, they're about the same. Also, the 3-year is about the same. The 5-year is also about the same, okay? Now, this one hasn't been around for 5 years, obviously, because they can't calculate that number. So the Strategic Advisors Value Fund must be a pretty new fund. Now they have different stars, have no idea really what that means. So let's click on this top one, the Value Enhanced Index Fund, and do a little more research. Now, here's the situation with this fund and with many funds. They're going to follow very much just what the Dow Jones Industrial Average and the S&P 500 will do. If you look at a 5-year chart or a 10-year chart of the S&P 500 and the overall market as shown by the Dow Jones Industrial Average, you're going to see a chart almost exactly like this. So essentially, they're not going to be too much different than what you could do by buying the spiders or the diamonds that follow the market. It's called passive investing. So basically, these mutual funds will charge you anywhere from 1 to 3% to give you the same return or even less of a return than what the market can do for you. That's my big beef, and many others, with the mutual fund industry. But it will do what they say it'll do, and that it'll diversify for you, but you can do that anyway through passive investing by buying an ETF called symbol DIA for the diamonds, represents the Dow Jones Industrial Average, and SPY for the spiders, represents the S&P 500. Okay, so you can get much lower fees by doing that. But anyway, there are different funds that you can choose from here. You can do your research here. You can see some of the stocks that this fund has invested in, including Citigroup. They've also invested in Berkshire Hathaway, which really diversifies their portfolio even more. So basically, you're going to get a really average return by investing in any of these big funds or by investing in passive investing through the diamonds or the spiders. All right, so that's what you need to know. Even so, if you have all of your money in a fund like this, at times when the recession comes, you're going to lose 50% of the value of your portfolio. If you sell down here, it'll come back up. The whole purpose that I'm all about at MarketTimingUniversity.com is to teach you to sell up here somewhere and then buy back somewhere down here so you don't take a 50% loss, and then you have more buying power because you didn't take that loss, so you can buy somewhere down here and get an even bigger bounce as the market goes back up. That is all I'm about, because there are ways to know when the market is somewhere near a high and about to go down, and somewhere near the low point and about to go back up again. It's not, exact, it's not pinpoint accuracy, but it's a lot better than just buy and hold. I can assure you of that. So, if you don't want to learn anything new, if you don't want to manage your funds, go buy a mutual fund. Determine if you can handle the risk and the volatility of a small cap versus large cap. Do your research at these different tabs here at Fidelity.com. But if you want to make more money, then come to my website. That's MarketTimingUniversity.com, and buy some of our inexpensive products that'll teach you how to make more money in the stock market. Still, Fidelity is a great company. They're trustworthy. I like them. I used to work for them. They're a good company. I still have accounts with them, and you can get a lot of good research off their website, even for free, even if you don't have an account with them. So that's a little bit about mutual funds. You can invest in stocks, in bonds. You can put part of your money in a stock fund or part in a bond fund. You can do all the research you need to right here. That's pretty much all I want to tell you about mutual funds. That's all you need to know. It's going to diversify your portfolio quite a bit, which it's hard to do if you only have a small amount of money, like $3,000 to $5,000 or something like that. So for what it's worth, that's a little bit about what a mutual fund is, and I hope that helps you. If you have any specific questions, go ahead and post that below and I'll answer them for you. This is Greg Kilpack of MarketTimingUniversity.com, and I hope you have a great day. Thank you.